Explain that. It's called
lazy girl jobs. We're talking, these videos have tens of millions of views on TikTok. It is all the rage among
Have
Gen
you made
Z.
one yet?
You look at these people who are actively recording themselves watching Netflix in their pajamas while they're supposed to be on the clock.
Right.
It's shocking. So I think that trend is not going to be long for this world. I think if you're able to copy and paste.
Are they getting fired? Even Zoom, the company this is, now throwing in the towel on fully remote work. The company that cashed in on the digital work revolution is now requiring most employees to work in person, at least 2 days a week. It's an abrupt shift from last year when it suggested a majority of its employees would work a hybrid schedule with just 2% working in person full time. Other firms, including now Amazon, Alphabet, Meta, Salesforce, and even the federal government have pushed for more time in the office, citing the need for in-person collaboration.
And AI has been the buzzword, and I just think they're going to be under pressure. Look, they're struggling to have growth. They're going to have increased costs. They're trying to expand their products, and so their margins are going to come under pressure. Yes, maybe some of the worst is behind them, and they have a lower bar, but you just think they've got so many headwinds to actually achieve growth. And so I think that 60 low is reasonable, maybe, but just too much downside pressure, and their chart is so ugly. Yeah. I mean, just like a bad hockey stick ugly. I just can't touch it right here.
Is Zoom stock dead? Why Michael Burry sold all of his Zoom stock and Baba stock. Michael Burry, the big short investor who became famous for correctly predicting the epic crash of the housing market in 2008, has bet more than $1.6 billion on a Wall Street crash. Burry is making his bearish bets against the S&P 500 and NASDAQ 100 after sold out of Baba and Zoom stock 100%. Burry's fund, Scion Asset Management, bought $866 million of put options. That's the right to sell an asset at a particular price against a fund that tracks the S&P 500. And $739 million in put options against a fund that tracks the NASDAQ 100. Burry is using more than 90% of his portfolio to bet on a market downturn, according to the SEC filings. In this video, I will dig a little deeper into Zoom video communication stock and Chinese big tech Alibaba stock to figure out the new red flags that triggered Burry selling out of China completely. I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? Let's get right into Zoom. Is Zoom stock a buy before the earning on Monday session?
Joining us in person, no less, on her birthday is Lydia Moynihan, reporter at the New York Post. I promised if she would come in
that you would sing.
That I would sing. So,
Lydia, you promised you singing.
I know this is not what I signed up for.
Whistling is different from singing.
Happy birthday to you. It's a small.
I got the gist. I got the gist. I mean, when I first came in and started talking about this, we were talking about quiet quitting. Right. Now we're talking about loud quitting. So that trend is certainly being amplified at the same time. But look, when you have Zoom, the company that arguably benefited more than any other company from the work from home trend itself, saying, you know what, there's probably a benefit to being in person at least a couple days a week. I think that says everything you need to know. But we did know there was going to be some sort of reset after the pandemic, that we probably weren't going to go back to a 5-day-a-week schedule, right? You saw a lot of people who realized, okay, I can work from home on a Friday. The world hasn't ended, and people don't want to give up that flexibility. So there's certainly an acknowledgement when even Zoom says we want people back in a couple days a week, that is going to be a trend. But I think we're going to see some sort of hybrid model pretty much across the board going forward. Of course, except on Wall Street, where you've seen people
6 days a week in the office.
7 days a week. Yeah, if you don't come in on Saturday, don't bother coming in on Sunday. That's the mentality on Wall Street. Clearly not the case in tech companies.
Unless you are a professional trader, I would suggest you do your own research before buying a stock before the earning, because it's hard to predict whether the market liked the results or not. For example, like PayPal and my block stocks, both these stocks reported solid numbers of double beats, yet the stock price crashed more than 20% surprisingly after the earnings report. Right now, because the sentiment of the stock market is becoming fearful, the trend is down. Maybe after you hear me out, you will probably decide it may not be worth it to buy. The thing for Zoom stock is that it's a lock-in home play and work at home play. Yet the Zoom corporate office itself is asking their own employees to come back to the office to work. That explains the demand of their product is lacking, which explains the growth of the business is slowing significantly. But that's not the red flag. The red flag is the cost of revenue number is ridiculous. Before the 2020 lockdown, Zoom was growing its revenue by 88%. Cost of revenue was $115 million. During the lockdown, revenue grew by 325%. However, the cost of revenue grew from $115 million to $822 million, which is over 700% growth in marketing and sales expenses. This tells me it cost them twice the money to grow at half the rate it used to. It's not linear at all. It tells me either they have very bad sales and marketing team, or their product is not as easy to use as their competitors. How much money does Zoom have to spend in order to get them that $1 additionally in the top line revenue? This is a red flag because it shows their product is not sticky, or it shows their old customer don't need to use their products as much as before, which is understandable because people have come back into their offices. And this situation continued to the most recent 2 quarters in 2023. Based on this chart, for every $5 Zoom has to spend on sales and marketing to grow their revenue by $1, this doesn't scale. A successful tech company has to scale. The recent 2 quarters is when they started to have negative operating income and lost money or decreased in net income. As revenue grow at 2 to 4%, it seems like Zoom has stopped growing. Because if Zoom stopped spending on their sales and marketing, their revenue would have decreased by now. So does their market share. But as they spend more in sales and marketing, that doesn't look good in the bottom line, which is net income and free cash flow, which is exactly what happened. Zoom's operating margins went down to 0.88%, so they are barely profitable now. How are they having so much cash in hands if they don't generate a lot of money from operation? By issuing shares, so we can't value them as a growth stock anymore. As they don't have a good enough free cash flow, value investor won't be interested in them either. That explains the stock price is not moving at all. Is it dead? Yes, it is dead. Now that you know why Zoom stock is dead, we can go back to why Michael Burry sold out of China.
China's economy is suffering from the opposite, deflation. Consumer prices declined in July for the first time in more than 2 years. People and businesses are not spending, and the world's second largest economy is struggling to revive demand. Most developed countries saw a boom in consumer spending after pandemic restrictions ended, but that has not happened in China. There is increasing pressure now on Beijing to take a more active role in stimulating the economy.
Today, there was even more bad news when Evergrande had filed for protection from creditors in a New York court. The company says that it's applied under Chapter 15, which says that non-U.S. companies undergoing a restructuring can be safeguarded from creditors who might be looking to sue them or tie up their assets in the United States. Yeah, well, even in this property, there are a lot of empty apartments here. It's a little bit more on the outskirts of Beijing, still in Beijing, but there are a lot of empty apartments, and that's part and parcel to the way that people invest.
What China's big earnings say about the consumer. Corporate earnings releases are picking up on a few bright spots for China's consumer in a competitive market where people are less willing to open their wallets. JD.com and Alibaba this month reported results for the 3 months ended June that pointed to a steady pickup in consumer spending that quarter, but with less clarity on whether that growth has continued. From JD.com. Electronics and home appliance revenues rose by 11.3% to $20.98 billion in the 3 months ended June. But general merchandise revenue fell by 8.6% from a year ago. From Alibaba, direct China commerce sales, primarily from Tmall Supermarket and Tmall Global, grew by 21% year on year to 30.17 billion yuan. The overall Taobao and Tmall group saw revenue grow by 12% to 114.95 billion yuan. A recovery in offline shows and the movie theater box office boosted Alibaba's ticketing and movie studio units. Video platform Youku also saw subscription revenue rise. In all, digital media and entertainment revenue surged by 36% year on year to 5.38 billion yuan, and its first profitable quarter. Local services revenue rose by 30% to 14.5 billion yuan. That was driven by orders on food delivery app L.me and growth in Alibaba's map app, Amap, which sells services such as ride-hailing and hotel booking. Alibaba management did not provide much detail on the state of the consumer since the end of June. Overall, Alibaba's earnings soundly beat expectations for the quarter. China consumption amid sluggish growth. Data for July have pointed to a slowdown in China's economy, including a modest 2.5% year-on-year increase in retail sales. Maybe that's the reason Burry bailed. Alibaba's domestic e-commerce unit, Taobao, and Tmall is hiring for more than 2,000 entry-level positions in a new sign that big tech firms in China are gearing up for growth after years of downsizing. The unit, one of 6 major business groups under Alibaba, is looking for fresh graduates to fill roles ranging from engineering to algorithms and data in places including its hometown, Hangzhou, as well as Beijing, Shanghai, Nanjing, and Guangzhou. The recruitment effort forms part of an overall plan by Alibaba. to add 15,000 employees, including 3,000 fresh graduates, across the company this year. Chinese tech giants, which had been under intense regulatory scrutiny over the past few years as Beijing moved to curb the irrational expansion of capital and pursue common prosperity, now plays an important role in absorbing some of the estimated 11.5 million university graduates who left school this summer. The government's crackdown on the internet industry had seen trillions of dollars wiped off company valuations and thousands of jobs eliminated. But as economic headwinds mounted, Beijing's attitude took a big turn in late 2022 as it began to highlight the positive value that internet platforms can bring to the country. The National Development and Reform Commission, China's top economic planning agency, in July praised internet companies for advancing high-level scientific and technological self-reliance efforts and contributing to the promotion of high-quality development. As Chinese big tech are starting to hire more and more young graduates, this doesn't sound like China's economic meltdown to me. It sounds like a political event that could be a buying opportunity for the patient investors only to pick up cheap BABA shares. You are such a good boy for watching my video right till the end. Bye.